Now that we focused on the ticks and the circles, our next step is to total up the cash receipts journal and the cash payments journal after making the supplementary entries for those items that were in the bank statement but did not appear on our site. So, for example, here in the cash receipts journal, we total it up. In the cash payments journal, we total up, starting with the totals that we had before receiving the bank statement, adding all the additional entries we made that were on the bank statement and not on our site. So the next step is now to post this to our bank account, so we know cash receipts journal will be on the debit side as the money in the bank increase, assets increase on the debit side. So we have total receipts of the 99,386. Similarly, for the cash payments journal, we have the total payments of 76,641. And now we can balance our bank account. So we can see our bank account has a debit balance. Now this debit balance is the balancing figure of our bank reconciliation statement. So if we go to our bank reconciliation statement, we can see the debit balance as per the bank account is 22,745. So we started off with the credit balance as per bank statement. If we go to our previous or to our bank statement rather, we can see the balance according to the bank was 32,955, and this was a positive balance, so it is a credit balance. You can see this from 32,555, and then there was a direct deposit of 27 that further increased it, so therefore it was a credit balance. So we have a credit balance, therefore, as per our bank reconciliation statement. Then all those items that we had additional that was not on the bank statement, that was circles therefore in our CRJ and CPJ, we added all of those, and then the final balancing amount is the debit balance as per our bank account after balancing our bank account. And now the debits and the credits should add up so that the bank reconciliation is in balance. And now there's only one thing remaining to know about when it comes to the basics of bank reconciliation statements, and that is that there's an alternative method. So we could use one column instead of our debit and credit column, and then the assumption is that we start with a positive balance, which from the bank's perspective is a credit, and so all our credits will be positives and our debits will be in brackets as negatives. And then if you add and you subtract, you should get to the balance according to the bank account.